Hey, welcome back to the Smart Money Bootcamp. Today is going to be a shorter video. It's just kind of going to be a video going over something that I want y'all to look out for, because there's a mistake that I see a lot of smart money traders, or at least new smart money traders, making, and that is still mixing in retail concepts and retail patterns and retail strategies with smart money concepts. And to be completely honest with you, that just doesn't work. It's going to give you conflicting information. It's going to be telling you two different things in most cases. And to be honest, retail patterns, in my opinion, are just crap. That's my opinion. If you trade retail, I'm sorry, but that's just the way that I feel. I don't feel that retail patterns work consistently. I don't feel like there is much thought behind them, because here's the thing. If you're going to be trading and you're going to have a strategy that you're trading, wouldn't you like to know why it works and the logical reason behind why it works? In my opinion, there's really no logical reason to why some of these retail patterns work. Maybe some of them have a reason behind it, but in the majority of it, I don't see it. But let's just get into it. Alright, so retail traps. Smart money engineers patterns that the masses can easily recognize. While these patterns work sometimes, often they are traps. Now let me just say this very quickly. Honestly, you can be profitable with almost any single strategy as long as you have proper risk management. The law of probabilities is going to ensure that you are in profit as long as you follow your rules every single time the same way, and as long as your risk management is sound. Smart money engineers these patterns to suck in retail traders while accumulating orders to later manipulate. Some of these include flags, double tops and bottoms, wedges, false breakouts, etc. As you can see over here, I got some examples. So here's a head and shoulders pattern, which these ones I do see working out more often than the other ones that are on this list, but I still don't trade them. I don't recommend you trade them. If you're in smart money, just don't do it, because if you're looking at the head and shoulders, it's going to take your attention away from what you're really looking for when it comes to smart money, like fair value gaps and institutional candles, order blocks, stuff like that. This rising wedge, I don't know how many times I see wedges fail and people marking up wedges and having a bias on what they think the chart's going to do, and then it does a complete opposite. Like, why does the wedge work? How do you actually trade the wedge? It's just too loose of a concept for me. And then this double bottom here, literally if you add one more line to it, if you had a line right here going down, that turns into a double bottom. So like double tops and double bottoms to me are crap, because they're subjective to how you see it, and I just think that that is too big of a hole in the concept for it to be a consistent thing that works. You got the reverse head and shoulders here, you got the falling wedge, and the double top right here. These are just a few examples. I don't really feel like I need to go into all the examples of it, but I just want to talk about this a little bit. I honestly never had to go through the trouble of learning retail. I went straight for smart money, so I never had to learn and adapt to some of these habits that I see other retail traders using. And I honestly couldn't even tell you how retail traders trade these patterns, because I've never had to do it. But for instance, why does a falling wedge work? You know what I mean? Like, what is the logic behind it? There might be some, like maybe because this price moved up and then started condensing in here, maybe that means that after so long it just needs to break out. I don't understand that. You know what I mean? And how do you trade this falling wedge? Do you trade it to the top side or to the downside? It could also be looked at as a bull flag or a bear flag right here. It's too subjective for me, and I highly suggest, again, if you are learning smart money, throw all these retail patterns out. And another thing, this is something else that I wanted to address very, very quickly in this video before I cut it. There's an element of smart money nowadays that is becoming mass retail, because everybody just wants to simplify everything. And while I understand why traders want to simplify things, and that's great, they start drawing patterns and they start posting them everywhere. And the thing is, at the end of the day, the banks are engineering price to trap traders, and they don't really care how they do it. But there's a reason why your institutional candles don't always hold up. There's a reason why your order blocks don't always hold up. You either need to see the liquidity or you're going to be the liquidity. And for instance, I'm going to go over to TradingView very quickly, and I'm going to show you the pattern that I see everywhere when it comes to smart money that I believe can sometimes be a trap and doesn't always work out. And this is why you should not just trade patterns for the sake of it being a pattern. You need to understand what's going on in the market, and you need to understand the story. All right, so real quickly, and honestly, this was the way I was first introduced to smart money, is there's a pattern, right? You got consolidation, right? And even if you look in here, you see you got a double top and you got a double bottom. So which way's right? That's one of the reasons why I hate double tops and double bottoms. But so you got consolidation, you got money building up on both sides, and this is a smart money concept. I will give you that, and it does work sometimes, but it doesn't always work. And then you got sweep, sweep, and then they say this is what happens, and this does happen a lot. But here's the thing, it doesn't always work. And I really feel that this pattern right here can get you stuck sometimes. For instance, I see this happen a lot. Sweep the top, sweep the bottom, and then this just becomes a liquidity run, which I have covered in the Smart Money Bootcamp, and then it just keeps on going. That's why you need to understand the story. Where are you at? What is the pattern? I mean, scratch that. Not what is the pattern. I actually don't want you to think that way. What is the trend? What is the story? What are the banks really trying to do? And that's stuff that you need to understand. If you just trade this just for the pattern, just for the sweep of the high, sweep of the low, and then think that it's going to continue to the downside, what is your reason for believing that? Don't just trade this pattern alone. I'm not saying this pattern can't work, but use it in conjuncture and with confirmations of the trend, breaks of structure, fundamentals, stuff like that. All right, I'm sure I might catch some flack for calling this a retail pattern here, and it's not that it's a retail pattern, right? It's a smart money pattern. But here's the thing, the banks can see liquidity, and if everybody knows this pattern here, right, and everybody has an order right here, that means there's stop losses above here now as well that the banks just may go and take and then go, right? Smart money is all about manipulation, accumulation, distribution, manipulation, and expansion. That's all I got for you guys today. I will catch you on the next one.